You're watching Traders Morning Setups with Dex the Algo Capitalist. Dex created his pulse wave price trigger reports over 2 decades ago, and he's been using them to ride the pulse waves as a full-time trader ever since. Find out more about Dex's reports and sign up for our next webinar to learn how to use them at pulsewavetrading.com.
Good morning, everyone. It's time for our morning setups with yours truly, Dex the Algo Capitalist, aka The Vulcan, coming to you live from pulsewavetrading.com, home of the world famous Pulse Wave Price Trigger Reports. Hopefully, everyone had a wonderful weekend. And it's time to face a new week. We got CPI data, PPI data, all types of data coming out this week. But first, I got to remind you, today is the last day of the freebies, the freebie watch list. You're going to want to go to pulsewavetrading.com, sign up. You have to register for this evening's watch list, just like you had to do for this morning's. If you want to get access to the trading room where you can ask questions, go over the reports from the night prior, trade positions, repositioning, all that stuff. That's what we do twice per day in the bullpen. And you also want to remember we are about to end the super discount, the monthly members pro membership of $99 a month, and the 1-year annual pro member subscription of $9.97. This will be going off the board. So if you have not already done so, you're going to want to head over to pulsewavetrading.com and sign up for this, because it's about to go away and the prices are going to be back to normal, which is a lot higher than the discount that's being offered. And you also don't want to miss today's podcast, Thinking Outside the Box. That's right. Thinking Outside the Box will be live at 11:30 a.m. Eastern Standard, New York time, Monday through Thursdays, only on Rumble. So you want to follow us on Rumble. All the links and descriptions of the description portion of this video, you can find it, or you can go to pulsewavetrading.com for more info. With that being said, it's time to take a look at what happened in the overnight. Well, we got the US dollar index up 4 pips at 105.90, struggling to get back to that 106 level. The euro is off 10 pips at 106.86, and the pound sterling is up 28 pips at 122.49. The Aussie is up 10 pips at 63.72, and the Bitcoin futures are down 540 at 37,015. The Ethereum futures are off 47 points at 2,061.50. Crude futures off 7 cents per gallon, trading at $77.10 per gallon. We got nat gas up 13 cents at $3.16. Gold futures up $2.50 per ounce, trading at $1,940.20 per ounce. Silver futures off 22 cents, trading at $22.05 per ounce. We have copper up 4 at $3.67. Dow futures off 70 points at 34,268. S&P futures are off 14.5 points at 44.16 even. NASDAQ 100 futures down 63 points at 15,533.25. Russell futures off 6.9, almost 7 points. It's trading at 1704.6. Soybean futures up 7 cents at $13.54 per bushel. Corn off a penny, trading at $4.62 per bushel. And wheat down 2 cents, trading at $5.72 per bushel. Scanning the markets now for possible 2-bar Charlie morning setups. And so far, we have nada. Ah, found one. First one we have here is in the Ethereum futures. We have a bearish 2-bar Charlie setup, which means we expect an all-day down day and for the market to finish in the red. All right, scanning. Okay, we have a bullish 2-bar Charlie setup in the nat gas. We expect an all-day up day and for the market to finish in the green. All right, still scanning. So far, those only two that we have. And looks like that about wraps it up. Yep, that's it. Just those two for this morning. All right, time for our morning Wall Street news segment. All right, so as far as the markets are concerned, a famed short seller talks about everything from crypto to Tesla. In tech, inside the secret deal between Apple and Amazon. What's up with all the secrecy? In business, how remote workers are double dipping and secretly working 2 full-time jobs. Very interesting. But first, unrealized losses and real fear. That's the $650 billion. That's the unrealized losses U.S. financial firms racked up as of September the 30th, according to Moody's estimates. It's a 15% bump since the end of June, thanks in large part to the rout in the bond market. And with the sell off continuing well into October, that figure is now likely even worse. Now, that's a pretty scary number to put things into perspective. If those losses were a country's GDP, it'd just be shy of topping the top 20. But the numbers also don't tell the entire story. So these losses are unrealized. That means there's a lot of wiggle room for how big banks can portray them on their balance sheet. Insiders Matthew Fox has a full breakdown of why banks can easily diffuse these balance sheet tombs. Whether it's simply holding them until maturity, meaning they won't suffer any losses, or cashing them out and reinvesting in higher yield bonds. Banks have always had all these different ways to navigate paper losses, up to and not limited to busting all the trades because they make the market. Very interesting when you start getting to the higher levels of creative financing. Of course, just because something isn't realized doesn't mean it's completely risk free. They said the Titanic was unsinkable, and we all know how that ended. Now, this is not fear mongering, but perception can quickly become a reality, especially with Wall Street's herd mentality. A firm can have no plans of selling its bonds for a loss, but if enough people fear they might do it, things can escalate quickly. Let's not forget Silicon Valley Bank. To be sure, big banks are better capitalized than SVB. Bank of America, which is sitting on some $130 billion in paper losses, has been adamant about its intention to hold its government securities to maturity. But circumstances change. While the bond sell off has cooled for now, there's always a risk it could spike again, putting even more pressure on banks to eventually pull the trigger. Remember, it's because you're seeing a technical bounce in the long treasuries, the ticker TLT, the long bond ETF, doesn't mean that the bear market will not reclaim the price action at some point. Even if things don't get so dire, those unrealized losses still feel pretty real to investors. Big bank share price noticeability dropped as bond prices sunk. Therein lies the biggest issue. Regulations already limit banks' balance sheets. Having more capital tied up in these bonds only further hamstrings lenders, and it could come at a worse time as new players keep pushing into their territory. Tim Scott drops out of GOP primary race after girlfriend reveal. Iceland issues state of emergency and closes world famous Blue Lagoon over fears of a volcanic eruption. 13 of the best looks celebrities wore to the 2023 Baby to Baby Gala. The U.S. is sending more Patriot defense systems to the Middle East. They cost $1.1 billion each, but they complain about entitlements. They always want to cut entitlements, but they never want to cut this defense spending. The military industrial complex gets to go on unhindered, unhampered, and receive whatever they want. They get a blank check every fiscal year. China's latest stimulus effort unintentionally creates chaos in its financial markets as short term rates hit 50%. Ouch. Talking about some, mafia type lending going on here, some loan sharking. 50% interest rate, that is just unreal. That would make Tony Soprano blush, wouldn't it? 50% interest rate? Good grief. Short seller Jim Chanos sounds off from crypto to Tesla and AI. Chanos touched on plenty of topics. You have to understand that the crypto ecosystem is well suited for the dark side of finance for a lot of reasons, Chanos said in a recent interview. How to tell if a deal is in the works. Bank of America detailed the key signs to look out for ahead of a company getting acquired. The bank's analysts also highlighted 10 stocks that are prime acquisition targets, including Ralph Lauren and Expedia. Well, of course, remember I sound that alarm for you a few sessions ago when I explained to you about the big roll-ups and the history of that going back to the early 1990s, and it was the late 1980s that actually set the groundwork for that to happen. So every industry since 1989, for the most part, has had a major roll-up situation, and it's just the way it is. 2 recession indicators are flashing, but it's not as bad as it sounds. The bad news, indicators tied to the unemployment rate and the yield curve, are hinting the market is headed down. The good news, they're being driven by something different than usual, meaning a recession isn't as big of a concern. In tech news, leaked internal email. Apple privately asked Amazon to block rival ads. Product pages for other companies are cluttered with a mix of ads and product recommendations from competitors. Meanwhile, Apple doesn't have ads or recommendations until the very bottom. Now, it's to be noted, to be fair, YouTube has ratcheted up its aggressive ads into videos, whether it's a sponsored type channel or not. It doesn't matter. They're putting ads on everything, on every video, and there is a difference, a slight variation, depending on what kind of device you're using to watch YouTube videos, whether it's a computer or it's a phone or a tablet or an Xbox or a PlayStation or a Nintendo Switch. It depends on the device, but for the most part, it is aggressive, especially on computers. They have changed their algorithm to the point now where if you're using pop-up blockers and ad block plus and all that, you will get a message saying if you don't turn it off, you won't be able to watch any videos on YouTube. Either that or you're being forced aggressively, I might add, to sign up and buy the YouTube. YouTube wants to be an app like the Disney Plus app and all the other apps out there, or Hulu or Netflix. It wants to compete with all of them. So it's forcing its users now to have to play ball. Very interesting turn of events. Twitch CEO is somewhat living the van life. Dan Clancy is traveling the U.S. in a van to meet top streamers and hear their concerns. Plus, he's reportedly even giving some of them his personal phone number. Emails reveal how Amazon and Google tap friends in government to influence policies. Last year, more than 80% of Amazon and Alphabet lobbyists previously held government jobs. Critics say that this relationship lets big tech companies limit how they can be regulated. Well, first and foremost, that is the way of the corrupt business practices and policies in the US that have existed for a very long time, where lobbyists are allowed to do the shady things that they do, and corporations are allowed to go along with it. No conflict. According to them, there is no conflict here. So you have this revolving door of business merging with the federal government. So heads of industry, titans of industry, leave the corporation temporarily, and then they go and they take over the head post of a government agency that regulates the industry that they came from. They do the bidding of the industry they came from. Most of the time, they are still on the payroll. And then when their time is up at that agency, they go right back to the industry that they left to work for the government agency. So it's always a revolving door of industry plants in the high government positions. Every single last one of them have ties to certain industries. Remember when the vice president back in the day, the same one who told you about global warming and wrote books and created movies about it? Remember when he left the White House? Where did he go? He went right to Wall Street, got snatched up by a big private equity firm. They broke him off something lovely. Why would they go there? Why would what's that about? Well, when they back you and they put you and plant you in certain positions in government, when you're done, you go back to the industry that backed you in the first place, that you came from. There you go. It's very, if you want to know who's really in the pocket of certain politicians, look where they travel, look where they land when they leave the public life as far as being a politician. If they go work for a bank or a life insurance company or a hedge fund or what have you, that's who owns them. That's where they go. It's a revolving door. But don't worry about it. No conflict of interest here whatsoever. Inside the strange, secretive lives of the overemployed, holding multiple jobs has long been the backbreaking way for low wage workers to get by, but the pandemic has fueled a similar trend among higher earners. An inside reporter spent several weeks hanging in the online communities of the overemployed. Big firms are now eyeing Airbnb as a money maker. A major private equity firm recently started buying Florida homes to rent on Airbnb. But making a profit can be challenging for individuals and major companies alike. Why strikes are working and which industries could be next? Experts said the economy is ripe for workers to demand more, partially because of the record profits some companies have recorded recently. They also said healthcare and food services are among the next industries to join the wave. Now, just remember, at the end of the day, folks, they want and need more and more people to be unemployed. All right. They have to have that. They said they needed to do that for they said they needed to do that in order to um bring down, cool off the economy, if you will. So it's just one of those situations. All right, so let's see here. The next one we got is, let's see here. All right, so Happy World Kindness Day. The day is meant to celebrate and spread kindness. It was created by the World Kindness Movement. And professional hockey team Vegas Golden Knights visits the White House. The trip is to calibrate the team's 2023 Stanley Cup. And in earnings today, we got Tyson's Food, among others. All right, folks. So that's all we have for today. You don't want to miss the Thinking Outside the Box, which will be starting at 11:30 Eastern Standard New York time. And remember, the deal is going off the table. So go to postwaytrading.com and take advantage of it while you still can. And with that being said, I'm out. Peace.